In this video, we want to talk about Intel. Now, if you scroll out to the monthly chart, it was an excellent 2023 where Intel price went from roughly $25 all the way up to $50. However, 2024 has not been a good year for Intel as the stock has returned all of those gains and then some. Yesterday, Intel shares suffered their largest decline in over 40 years after the company gave a grim growth forecast and laid out plans to slash 15,000 jobs, signaling that the chipmaker is ill-equipped to compete in the AI era. Intel heads for its worst day on Wall Street in 50 years. Its worst day was in 1974. Intel CEO, what do you got to say for yourself?
Fundamentally, the four areas of our business, we're not changing any of those. A foundry, our client networking and data center business, those four areas. But within each one of them, we're looking at the portfolio of things and saying which ones are getting good financial return and which don't have as good a market or financial opportunity in the future.
Before we look for a support level, let's get into the nitty-gritty with regards to the quarterly report. Again, Intel stock is plunging lower to prices not seen since 2013. Indeed, shares are down by over 25% after the company reported second quarter earnings. These are the details. Intel's revenue fell by 1% to $12.83 billion, missing the analyst estimates for $12.94 billion. The firm's adjusted EPS of 2 cents also fell short of the estimates for 10 cents. Net loss was also $1.61 billion compared to net income of $1.48 billion a year ago. Guidance was a major letdown for the company as well. Intel guided for Q3 revenue between $12.5 and $13.5 billion, with an adjusted EPS loss of 3 cents. Meanwhile, Wall Street was expecting $14.35 billion in revenue, with an adjusted EPS of 31 cents. So you can see how off these numbers are. In the report, Intel announced a cost reduction plan that involves laying off more than 15% of its employees by the end of the year. It expects to reduce its non-GAAP research and development, marketing, and general and administrative costs by $20 billion this year and $17.5 billion next year. In addition, the firm expects its 2024 capex to be lower by 20%, tallying in between 25 and 27 billion. So it's pretty ugly, pretty ugly. All right, going back to the charts, this is the monthly chart, and I'm going to squeeze the chart to look at where price stopped going lower and started going higher. And my eyes gravitate to this $11 level, $12 level. Let's zoom in. You can see on two different occasions, price came down, buyer stepped in, price came down, buyer stepped in. Now, below that, I pretty much like this level here. You have resistance and you have support. Although that is a $5 range. So if I tighten that up, that becomes a $6 range, $3 range. You also have a rally based in the rally. So that would be a potential target. However, I think if price declines to this $12 level, that'll be your opportunity to back up the dump truck. We are relatively $7 away from that first target, and then another $9 away from that second target. I do anticipate a pullback and then a potentially decline in the subsequent months later this year. Thanks for watching. Subscribe. Please like the video.